Hello, everyone. In this presentation, we will discuss the strategic decision which was made by the Daimler Group, known as Mercedes, to split the company, the group, into two different entities. As we can see, this decision was made in 2021 when they spun the Daimler Group into two entities: Mercedes-Benz Group AG, which is responsible for luxury passenger cars and vans, and Daimler Truck Holding, which is responsible for commercial trucks and buses. Of course, it was this decision was made on a high level of Ol Kaunas, which is the chairman and board management of Daimler Group by that time, and Martin Daum, the CEO of Daimler Truck, and also was supervised by the supervisory board of Daimler, which was created especially for this spin-off. We can see that the Daimler Group has been carried out by three legally independent units under the umbrella of Daimler AG. The Mercedes-Benz AG carries out the business operation of the Daimler Group in the Mercedes-Benz Cars and Vans division. The business operations of Daimler Trucks and Buses are carried out by Daimler Truck AG. As a part of Daimler Mobility Division, Daimler Mobility AG is responsible for the group finance and leasing products in particular. Before it was Daimler Group, we can see it was divided by Mercedes-Benz, Daimler Truck, and Daimler Mobility, and now it's totally two different entities, which is focused on the first one, the passenger cars, luxury experience, B2C model, and the other one is commercial vehicle, which is mainly B2B, focused on to B2B business. We can see also which made this transition a bit complicated due to the shareholder and the ownership structure of the group, which contain international investors like Bike Group and Kuwait Investment Authority. And in this diagram, we can see how the split of the shares was done. Thank you very much. I will pass the word now to my colleague Sam to continue with the tools we use for analysis of these decisions.
Thank you, Norris. My part will be discussing the strategic environment analytical tools in order to analyze the decision that was taken by Mercedes in order to split into two different entities, which is Daimler AG and Mercedes-Benz. So let's begin by analyzing the environment in which Daimler made this high-stakes decision, where they use PESTEL, SWOT, and TOES frameworks. First, we're going to start off with PESTEL, okay, in order to analyze this decision on a macro level. First of all, the political landscape where they have taken this decision. The first point was for them to do so was the increasing emissions regulations from the EU, US, and China, which drove the push toward zero-emission vehicles. The second point under political was the global trade tension, and the Brexit challenged supply chains. The economic aspect of the PESTEL part was due to the post-COVID recovery introduced demand volatility. High research and development costs for EVs and software made a centralized model unsustainable. Investors demanded capital efficiency and transparency. The social aspect of PESTEL, rising consumers' demand for sustainable and connected vehicles. Business to business clients sought efficient logistics and smart fleet solutions. ESG awareness became a key investment driver. The technological part of it, we start off with Mercedes-Benz was investing in autonomous tech and EV platforms. Daimler Truck required dedicated R&D for fuel cell and hydrogen technologies, so both required unique digital ecosystem. The environmental aspect of PESTEL, sustainability targets demanded carbon neutrality operation by 2039. Regulatory pressure from the Paris Agreement and EU Green Deal accelerated green strategies. Finally, we're going to close off PESTEL by the legal requirements. The spin-off complied with the German Transformation Act. ESG disclosure and IP sharing and the labor law protection were legally mandated. The second tool that was used to analyze this decision, the split off, was the SWOT analysis. We have analyzed the internal and the external components factors that uh, have an impact on that and were impacted by the decision. So, what are the strengths? First, global brand recognition by both entities, their technical leadership in both segments, strong cash position. The weaknesses, on the other hand, the sluggish decision making due to their conglomerate structure, that was one of the major key reasons why they have split off, misaligned product and innovation cycle. What were the opportunities, on the other hand? Investors' appetite for focus entities, regularity support for EVs, premium segment expansions, and finally, the threats of this agile competitors like Tesla and BYD, rising input costs and inflation, ESG non compliance penalties. Then we have analyzed the decision using the TOE analysis, the what are the strengths and how it was matched with the opportunities. So strategy. So use strong brand and cash flow to lead in premium EVs. What how the weaknesses were not matching with the opportunities. The overcome inefficiencies by restructuring into two agile businesses. That was the main reason why the two companies have split off in order to focus on both their businesses and have a more specialized approach towards their customers. The strength matching the strength with the threats. So Mercedes and Daimler Group, they leverage global scale to stay ahead of disruptive players like Tesla and BYD. The weaknesses with the threats: eliminate governance bottlenecks to mitigate risk and improve market responsiveness. These strategic tools gave Delmer a 360-degree view of its environment, helping justify the separation as a necessity, not just as a choice. And by this, I conclude my part, and I'll pass on my the following part to my colleague Saleh, who's going to speak about governance, strategic, and alignment and risk. Thank you.
Thank you, Sam. I'm going to go through the stakeholder analysis, some governance related to the transaction. The stakeholder analysis outlines the key groups affected by Daimler AG's 2021 decision to split off into Mercedes-Benz Group AG and Daimler Truck Holding. So I will identify some. Of course, it was all listed, the major ones and the most affected ones, but I'm going to go to the level of influence for each. We will focus on the high ones. We have the shareholders and investors, board management, of course, board of management, a supervisory board, and we have the trade unions, works, and councils. There is also governments and regulators. And finally, we have the pension funds. There is also as well one of the key focus areas for the analysis, the scenario planning. To assess the possibility future environment, Daimler AG may face post spin-off to evaluate the robustness and effectiveness of the separation strategy. So most likely scenarios after 2021 was the green premium split. To follow the ESG and carbon neutrality, we're rising above for top investors and regularities. They are prioritizing it the most. As we can see, also EU, Europe, US, and China were pushing to zero emissions targets, so they have to align all of them with the same concept. Governance and cross-border decision-making complexity. It's one of the most important in any decision, such as decision of the split off between the two companies. So Daimler AG has centralized control over all the divisions, but after there are two independent listed companies were created. Mercedes-Benz Group AG and Daimler Truck Holding AG. Each has its own board, legal framework, and risk management system. New articles on cooperation divide responsibilities and oversight. This changes and decentralized power, improving speed and accountability. Now, in regards to the cross-border complexity, as it's operating in 150 plus countries, introduced challenges in tax legal, regulatory compliance, labor law variations, and union coordination. Brand licensing, of course, and service dependencies. Delmer addressed this through a group separation and new consolidation agreements, service legal agreement, SLAs, to maintain IT, HR, and logistics supporting during the transition. This avoided disruptions while preserving institutional knowledge. So, in regards to internal alignment, Mercedes-Benz pursued luxury EV innovation, while Daimler Truck focused on B2B logistics and fuel tech. Independent capital allocation, performance KPI, HR system allowed each company to focus deeply on its core market. Moving on to the external alignment, the spin-off was also aligned with a market expectation for pure play investment opportunities, regulatory ESG mandates like EU Green Deal, customer needs, while Mercedes-Benz saving luxury consumers and Daimler Truck supporting commercial logistic clients. Investor strategies, allowing stakeholders to pick the growth versus income assets. Now we'll move on to the risk management, which is one of the major things during this transaction. Daimler anticipated and mitigated 5 risk categories: operational risk, duplication, service delays, and we have the legal risk, ESG compliance, labor protections, financial risk, secure A3 and BBB plus rating for Daimler Truck, and strategic risk, brand dilution addressed by Mercedes-Benz licensing. Finally, the reputation risk, clear messaging, and responsible employees transition. Now, I'm gonna hopefully I covered most of those aspects. Now, I'm gonna give to my colleague Carlos for the financial aspects.
Thank you, Saleh. Let's now explore whether this decision actually worked, supported by financial data, market performance, and strategic outcome. Strategy after company split. Mercedes-Benz Group sharpened focus on premium electrical vehicle, started new series, EQS, EQE models, EPT margin jumped to 13.6 in 2022, ROI increased 17% and ROA to 6.2. Daimler Truck Holding AG becomes the largest independent commercial vehicle maker, strong financial launch, 5 billion net liquidity, triple B credit rating, launched e-Actor and Gen H2 trucks. Market and investor response. The group discount was removed. Investor gained transparency and strategic clarity. Shareholder received 65 direct ownership in Daimler Truck. Key financial ratios. Liquidity and efficiency. Current ratio improved to 1.4 times. Receivable turnover increased. Debt to liquidity dropped to 0.52, reflecting strong financial independency. Profitability. Split Mercedes-Benz report higher EBITDA and net profit margin, indicating cost control and price power. Conclusion. The Daimler spin-off was not only well planned, but also effectively executed, supported by strong strategy tools, sound governance, and strong financial outcome. Mercedes-Benz now lead luxury EV innovation. Daimler Truck is reshaping sustainable commercial transport, and investors gain value, flexibility, confidence in both entities. This case demonstrate what happened when strategy, structure, and execution are in perfect alignment. Thank you so much.